Hi, this is Shelley Kraft, and welcome to SNN Live. We're at the Cambridge House International Summer Conference in Vancouver 2012. With me, Jeb Handwerger, a gold stock trades newsletter writer and featured speaker at this conference. Jeb, welcome to SNN Live.
Thanks for having me here.
What did you speak about?
Well, I was on a panel yesterday on graphite and critical metals, and I'll be speaking today about how we're going to be seeing soon a bottom in the resource sector.
Oh, let's go bottom fishing, folks. We love that.
So do I, and this is a time to be looking at undervalued resource stocks that are trading at historic discount valuations.
I did an interview earlier today, no question about it. And I said, wait a minute. We don't have to pick tops and bottoms, but if I'm looking up, I don't see the top. It's pretty far up there. So that must mean I'm near the bottom, aren't I, Jeb?
Right. And no one gets the bottom. The only person that gets the bottom is a liar, according to Bernard Baruch. But we're getting close to it. We're getting to record discount valuations in the gold miners' historic discount valuations, especially compared to the underlying gold bullion. We're having a lot. I see a lot of catalysts coming down the pike, we could see a spike in precious metals, and the mining shares will begin to outperform, like we saw in 2008, where the miners outperformed gold after the 2008 decline. It was up close to 220% when it hit the bottom in 2008.
So, what do you think? What kind of money's coming into the market now?
Very smart money. The dumb money. I wrote an article on this recently. The dumb money is buying Facebook at 100 times earnings, while we're seeing miners, the top gold miners such as Barrick, trading at 8 times trailing earnings. So this indicates that it's trading at below the S&P 500. So we're nowhere near a top or a bubble in the gold market. We're actually really close to a bottom, especially in these undervalued miners.
I interviewed a company earlier today. I'm not going to mention any names, but it was an Alaskan gold producer, and their stock was trading at around a penny. Now, look, there's other circumstances. There's a lot of shares outstanding, a lot of factors that go into it. But you know what? That was significant to me, of something that's near a bottom, if you ask me.
Right, and we're seeing at the conference, we're seeing a lot of companies not here. We're seeing a lot of investors to have a very negative sentiment. This indicates what happens at bottoms, and the retail money usually sells out during a panic, and the smart money was able to pick up shares on pennies on the dollar.
And right now there's no volume. Liquidity's dried up. So that means you could buy it at a price that would make sense to you.
Right. The fundamentals are still strong for precious metals. We're seeing the Federal Reserve with a possible quantitative easing, possibly within this month in June, the June 19th meeting. It could be a very important catalyst.
Yeah, I don't think it's going to hold. I think it has to obviously give way.
Right, and we're seeing in Europe, Merkel being under a lot of pressure for Eurobonds for these peripheral nations. Obama's putting a lot of pressure on Merkel, and we're seeing that the new election in France with Holland. These are all politicians that are going to promote printing euros, printing dollars, and that is very good for precious metals and mining stocks.
Because what's the interest rate paid right now in the U.S. on savings accounts?
Hardly nothing. So
right. What's the yield on bonds?
Negative.
So I mean, where are you going to put your money?
That's exactly right. We're living in very difficult times, and the question is, where are the safe havens? We believe that the safe havens are intangible assets, where there are underlying strong fundamentals. We like the mining stocks. We like especially the uranium miners, because we believe that the supply-demand fundamentals are very strong for uranium. We like the critical metals, the rare earths, We're seeing over 97% of supply coming from China. We like also some of the graphite stocks, where we're seeing close to 80% coming out of China, and the supply-demand fundamentals are still strong in these sectors. Unfortunately, we're in a panic, and the panic is causing the retail, the dumb money, the retail investors to position their portfolios in a record level in cash and treasuries. So that indicates we're reaching a top, a bubble in the treasury market. We're reaching a bottom in the tangible assets, in the natural resources, and the venture index.
So once the tide turns, then it's the hockey stick.
That's right, and sometimes you can't catch a bottom, but it's better to get in early than to be late. We're right now at a time where investors should be studying some of the quality precious metals miners and mining-friendly jurisdictions with excellent management teams, to look at the undervalued uranium miners in the Athabasca Basin and the Powder River Basin in Wyoming. We're seeing 5 new nuclear reactors coming online in the United States. We're seeing Cameco raising $1 billion, and they're saying they're looking for acquisitions. And at these prices, we're seeing some of these uranium miners with pounds in the ground just trading at ridiculous cheap prices.
Now, if you're interested in finding out more information about what this young man has to say about what he thinks this market is doing, what website do you want to give?
goldstocktrades.com. You can sign up for my free newsletter.
Ladies and gentlemen, Jeb Handwerger from Gold Stock Trades, a featured speaker and a friend of mine. By the way, we're at the Cambridge House International Summer Conference here in Vancouver 2012. It's great to see you, bud.
Great to see you, Shelley. Thanks.
Take it easy, dude.